In this video, we want to talk about Domino's Pizza and really why did we see this sell-off that occurred last week. Let's get into the news and then we'll get into the charts. So shares of Domino's Pizza fell over 15% last week. The largest pizza chain in the world posted strong comparable sales growth and earnings for the quarter, but projected weaker sales store openings and a sales slowdown in the latter half of 2024. Investors decided to sell the stock down 13% after its earnings came out last Thursday morning. So why was the stock down? Well, guidance for the rest of this year and long-term unit growth was the reason. Domino said that comparable sales growth would fall 3% in the U.S. for the rest of 2024, which likely disappointed investors. More importantly, management now believes it will fall 175 to 275 stores short of its 2024 goal of opening up 925 stores internationally. Now, Domino's might grow slower than investors previously expected, but the business is still doing fine. Traffic is growing in the U.S. and internationally, which consistently positive comparable sales growth. With just over 20,000 stores around the globe, the company still has plenty of room to expand its unit count. For instance, McDonald's has twice as many locations around the world. Domino's now trades at a price-to-earnings ratio of 27. While not dirt cheap, this is a reasonable valuation for the company that puts up consistent growth. So the question is now the time to buy? Well, when price was rising to all-time highs, that was your opportunity to get short. Now price has sold off, and price is in the middle between support and now resistance. Momentum is to the downside if you go to a smaller time frame. Let's go to the weekly chart. You can also see how price was rising and then stalled. That was also your indication when you had a close below this uptrend that you might want to be a bit careful if you wasn't out at the time. And then on the news, if you look at the daily chart, this is where price sold off at. Now, you have to be cautious because price is now below this 200-day moving average, which is going to serve as dynamic resistance. You can see that the price fell to the magical round hole number of $400. This is a level, and these are big levels that institutions on Wall Street follow and abide by. And so price can bounce, whether that be off of support or resistance, in this case support. And the question is, where's price heading next? Well, according to the RSI, price is oversold. So rightfully so, you are getting this bounce. If I scroll to the left of the chart, I can see how price served as support, resistance, resistance. So this is a level that price likes to gravitate to. And we can probably see that a bit better if we scroll up to the weekly chart. Support, resistance, resistance, resistance. Now, when I look at things on a weekly chart, there are really no levels of sellers until you get to the origin of the drop, and that would be at $473. Other thing to note, your moving averages are now turning down. Your momentum moving averages, which is the blue and the orange, is pointing down. And so there's really no trade setup because the reward to risk is not very favorable. Yes, you can say price might try to move higher and close this gap. However, you're going to be met with moving averages that are going to serve as dynamic resistance. And so what's the play? You get a close below $400, a retest, and then a move lower to $300. However, I don't think that's going to happen anytime soon. That might happen in the future if we go into recession and consumers lock up their wallets. But other than that, Domino's has a very good strategy. It's called the Fortress strategy, in that there's a Domino's within a couple of miles of each other, and that's done on purpose to not give you an excuse to not travel to a Domino's to get pizza. Thanks for watching. Subscribe. Please like the video.